see, if you're East Coast, it is, 2:30 there. If you're West Coast, 11:30. If you're in the middle somewhere, it's between there. So you guys do the math. In case you were wondering what time it is where you're at.
We have to start telling everybody we go live because we're getting a lot of copycat accounts.
We have a lot of copycat accounts, guys. People acting like us, and they hate us. You know why?
Because they ain't us.
I like that, man. I like that. I like how you enunciated that.
Yes, you know why? Because
I know why.
It can go wrong real fast.
I know why.
It can go wrong real fast.
You're enunciating fool. All right, guys, you know the rules. We're asking questions about real estate. We're asking questions about interest rates. We're asking questions about what's coming down the pipe, down the road later this year. So put them in the chat box. We'll make sure to get to every single one of your questions that you answer. I don't care what it is. We will read it. We're like Ron Burgundy around here. And if you don't know who Ron Burgundy is, you got to watch Anchorman because it's funny.
And get a life.
Funny. Well, you can do it at night after your life. When you're falling asleep.
Fair enough. Yeah, I can do it.
When you're falling asleep. All right, Lee, what's going on in internet world?
The Fed spoke a couple of days ago, or yesterday. Fed spoke. You know what he said? Oh my God, it's crazy.
What did he say?
It's so counterintuitive because we were all expecting, because the numbers came in pretty bad, that the Fed was going to go, all right, we might put back on the table increasing interest rates. Or we might change our forecast from 3 reductions in 2024 to 2. So it was a lot of speculation. The market was responding. And then Fed Powell came out and he said, hey, we're keeping the forecast of 3 reductions. And we still believe we have everything under control. And we'll be data dependent. Those are his words, data dependent, which is kind of good news. And then you know what mortgage rates did? Tick, 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 started coming down. And I tell you, there's an uncertainty factor that's factored in. And when that uncertainty factor is factored in, there's a higher yield spread between the 10-year yield and the mortgage rates. And when there's certainty in the market, it starts to come down. Now, here's another thing that got recasted in the last few days. Everybody puts out their forecast for the year. Hey, what do we think housing prices are going to do across the board? And big people like Redfin, Zillow, National Association of Realtors, these big people who are in real estate for a living. And they have all said, hey, we expect a little bit of an increase. Some of them said we're going to be flat. Everybody readjusted their numbers yesterday. All of them have gone up dramatically. Everybody believes there's going to be a real estate increase in 2024 of pricing. Yeah, so all those people who said it was going to crash, sorry, you're wrong. Sorry, you're wrong. You could still be right, but right now you're wrong.
All right, Miss Carnell in the house. Thank you for joining us. Do you have to have good credit to get a HELOC from your home?
You answer.
So good credit is kind of a silly word, so I'm going to say this.
Silly.
Well, here's the reason why. Is because people in the 600s, they may have like a 690. They're like, I don't have good credit just because they don't have a 700.
Yeah.
Okay, so that's why I say that. Now, so do you need good credit? So you need to have a better than a 620. Let's put it that way. Okay, you need to have better than a 620. There's no exact FICO score. What HELOCs do is kind of like what credit cards do. How much debt do you already have? How much income are you making? Does it make a little bit of sense? And if it does, we'll extend the credit to you. If you don't have that, then they won't extend the credit to you. HELOCs, different animal. They don't act the same as regular mortgages. Why are you showing us your high school pictures?
Anyway, so Jerome Powell spoke yesterday, and he said, hey, we still anticipate 3 interest rate reductions. This guy said, we still anticipate 3 interest rate reductions. That sent the market crazy, like crazy. All-time highs yesterday. All-time highs. What are y'all hawking? We're hawking. We're loan officers. NMLS 944254. NMLS
1066958.
And New American Funding 6606. We're mortgage loan officers. Bye. Bye. Bye, Cotton. Great to see you, man. Glad you logged in. Hey, we got a lot of people logging in. We appreciate you. Where are you at? Do you want to buy a house in 2024? What questions do you have? Is 0 down worth it? Is 0 down worth it? Is it?
Yeah, for some.
Okay. For everybody?
No.
Okay, why?
because those that should just move forward with the traditional way of doing things. It'll make life easier. You won't owe any money. You're not in a financial relationship with the state of California or whatever state you're in. So a lot of different reasons. So if you have the ability to do it on your own, I say do it on your own.
Well, like right now, the Dream for All program is a big program, and they're like, hey, if you look at the ads, it's insane because they're like, hey, we'll get you 20% down. 20%. That's crazy. That's like, hey, I get 20% free money. Sign me up for that. I want 20% free money. Who's going to give me that free money? State of California. But is it free money? No. Sit down. You got to learn something. It's not free money. They want the money back. And they want it back with appreciation, shared appreciation. So you are now in business with the state of California. So it's a little bit different.
Yeah. Roberta J in the house. Thank you for joining. Can I afford a $400,000 home if I make $83,000 with a 720 credit score and debt 760?
Debt 760, $760?
Yeah.
A month?
So I'm assuming credit 720, debt 760.
Maybe. The answer is maybe. You're in the range. You're in the ballpark. You're probably in the high threes, low fours. There's a few other factors we have to take into case. Like, for instance, if you're in a very high property tax base area, like Texas, some part of Texas, 3.7%. But in some parts of Arkansas, it's 0.6. Wow. So the tax base is a very big deal depending on where you're at. And a few other factors, but maybe you're in the ballpark.
Yeah. Austin Porter, I'm at a 499 and need a 500 to qualify. I've got 10% down, but they still won't do it.
Austin.
I literally paid off all my debt and just waiting now.
Okay, Austin, you probably need to call us because if you're at that level, you need to do what's called rapid rescore. Because if you're waiting for the cycles, it could take 60 days before everything lights up and you paid everything off. But here's the problem, Austin. If you were late last month and you had a 30-day late like last month, 2/24, last month, that still factors in even if you paid it off. It's going to be there. It's not going to disappear. The reason that you use credit repair companies is not so that you can pay your bills off, because it sounds like that's what you did. You paid your bills off. But it doesn't make this stuff disappear. Credit repair companies use different formulas, and they say, hey, this trade line is bad for you overall. We're just going to have the whole thing removed. And they do sometimes what's called a pay for delete, which means I'll pay you off, but you have to delete everything. And they know whether or not that's better for you. Sometimes it's better, sometimes it's not better. But if you just paid it all off and you had a whole bunch of lates last month, it's going to take a while for it to get better. Now, there are some things that can be done to rapid rescore. And one of the best hacks you can do, is you go up to mom and dad and you say, hey, mom and dad, hey, I know you got an 800 FICO score. And I know you've been paying your bills on time for the last 50 years. So what I'd like for you to do, mom and dad, is please make me an authorized user or owner of one of your old credit cards. If you make me an authorized user or an owner of your old credit card, I now get 10 years of history of paying bills on time. You're borrowing their credit, basically. And then mom and dad are going to say, well, what are you going to do with it? You're going to say, really nothing. When the credit card comes in, you can shred it if you want. You can keep it. I just need to show that I've been paying my bills on time. Now, the truth is you haven't been. You're borrowing mom and dad's, and they're trusting you. But you can spike your score a lot. From 499, probably go through the roof.
Through the roof. Are you licensed in Louisiana, though?
Yes, we do business in all 50 states, Austin. All 50 states.
Miss Nashia. Question. My scores are 586 and 601, making $59,000 a year in Oklahoma. Can I qualify for a loan?
I say maybe yeah. Maybe yeah. And I say you should start because the 586 FHA 3.5% down starts at 580, but we have to figure out what got you to 580. If you were lower credit score, that's because you didn't pay something on time. Now, if it was 4 years ago, then we can just, that happened then. But if it was last month, it's a problem. It's a big problem. So we have to deal with those problems so that we can get you qualified to get into the house.
So both Austin and Miss Nashi, I recommend both of you call us. I think those are both doable deals. There may be some challenges, but here's the good news, is that if we identify challenges, we'll teach you what they are, and then we'll teach you how to get over them.
Yeah.
So there you go.
And we don't invent the rules. We just understand them, and we know how to navigate the waters to help you get the house. So I tell people, hey, if you want a house, I'll get you a house. I'll help you get a house. It may not be today, maybe not next month, maybe a year. But if you really want it and you're going to commit, I'll help you get that house.
Austin, yes. Lee just answered that. He had a phone call, so he didn't hear it. But
Okay.
yes, we can absolutely help in Louisiana. All 50 states in the country, all 50 of them. There's not one we cannot help in.
How many states in the country?
50.
All 50. All 50, man. All 50. We're here for you. We appreciate you on Facebook, Instagram, TikTok, and YouTube. We go live Monday through Friday from 11:30 to 12:30 Pacific Standard Time so that we can answer your questions. Be careful of the copycat accounts. There's a bunch of them out there now.
Yeah, we go live every day, Monday through Friday, 11:30 to 12:30, guys. So if you have to go back to work or if you have to pick up the phone call, we're always here every Monday through Friday, 11:30 to 12:30 Pacific Standard Time.
Yeah, Miss Nisha, is it easier to go USDA or FHA? So, both of them are government programs, but they're different. They're different. USDA is geographically approved. The house, the actual address has to be approved for USDA in order to qualify for USDA. And if you go USDA, you can go zero down. That's how the loan is built. It's zero down. But the house has to be qualified. After the house is qualified, then the borrower gets qualified. FHA is different. The borrower gets qualified, and once the borrower is qualified, we make sure the house is qualified. Different processes. FHA is 3.5% down unless we use a down payment assistance program. Hope I helped you with that one.
Austin Porter again. This house is on the market, and I'm trying to secure it before it sells, so I'm rushing it.
All right, Austin.
You need to, man.
Yeah,
Houses are moving fast.
Yeah, and everybody thought there was going to be a gigantic crash, but even the greatest minds, you have to remember that when these minds come together, like J.P. Morgan or Goldman Sachs, it's not one guy just sitting there going, I think the market's going to crash. They're looking at droves of data going, hey, this is what I see based off all this data. And all of the experts were saying, hey, listen, we don't think there's going to be a housing crash in 24. Now, there's a bunch of people going, yes, there is. Oh, it's ugly. Banks are finally going to get theirs. Oh, I'm going to hold off until the market crashes, and then I'm going to make a killing. Well, yeah, no. We're in 2024. We're third quarter, almost done with third quarter, and houses are going up. And houses are going up. Oh, dude, Andy the Goat is
back
in the house. What's up, Andy the Goat?
They made a
Mr.
whole movie
Series
about
7.
one guy predicting the market crash. Oh, wait, Mr. Series 7.
Yes, they did. They did. It's called The Big Short. It was a great movie. It was. That one guy, he did predict a lot of good stuff. And I watched the movie, and I've lived the world. So, Andy the Goat, I'm gonna fill in not only you, but the rest of the users here. What they were doing in those days was called the ninja loan. No income, no job, no assets. They lied. Basically, everybody lied. And because there was no regulation at the entry level, which was the loan officer level, what we do, there was no entry level. You didn't have to have a loan officer's license. There were a bunch of people running around going, I'm a loan officer. I make lots of money, and I understand finance. And I'm like, no, you don't. You don't understand anything. So The Big Short is about a guy who said, hey, wait a minute. I just talked to a whole bunch of people who should not be buying homes, and they own 5 homes each. And then when he started doing the numbers, he's like, these guys can't afford the homes. The minute this thing crashes, it all crashes. And it was right. He was right. And made, like, it's a legendary thing. That's why there's a movie about it. So, in response to that, the government, although it's slow, stepped in and created something called Dodd-Frank. Dodd-Frank is a regulatory system of laws that insulate people. Like for us, loan officers, we have to go through an FBI background check and pass a real rigorous test. And once we pass the test, we're allowed to be loan officers. But we got rules. We can only touch a loan for so long. And then we transfer it off the processor. After I transfer to processor, I can't do anything anymore. The processor now has the loan. When the processor transfers it to the underwriter now has the loan. And once it gets all the way up to those steps, you can't touch those. It's illegal for me to talk to an appraiser while we're doing a loan. It's illegal. You know why? Because before the crash happened, the loan officer was going, hey, buddy, I need $500,000 on this. You know what I mean? You know what I mean? You know what I mean? And they go, don't worry about it. I'll get you $500,000. Oh, by the way, we're golfing. You're paying, right? That was happening all over the place. In order to make sure that doesn't happen again, the series of laws, Dodd-Frank, kicked in, and now it's very, very, very rigorous to get a loan. That's been the case for at least the last 12 years, maybe 14 years. And because of that, by and large, everybody who's in a house can afford their house, which means no crash.
Yeah. Thank you, Mr. Camacho. Camacho in the house. Guess what he said?
What'd he say?
Time for commercial.
Okay, cool. If you need a badass loan, call a badass loan officer. You can reach your badass loan officer at New American Funding. Yes, we do business in all 50 states. You can reach them by calling the numbers on your screen. But don't call right now because we're live and we're talking to Andy the Goat. That's it.
But you can text us and we will call you as soon as we're done.
Yep.
So, Andy the Goat, yep, I agree, man. Jay, would you recommend a conventional loan or FHA for the first-time home buyer?
JJJ, it's going to depend on two things. Two things. One of them is your FICO score. If you're just barely qualifying, just like 620, 580, if you're just barely qualifying, probably better off with an FHA. Probably better off. But if you have a dynamite if you're an 800 FICO 5, if you're an 800, you're probably better off with a conventional. So it is going to depend on your FICO score, and one more thing, debt to income ratio. If you're pushing the line and you need an extra, a little bit more, probably better off on FHA. But if you're buying responsibly and you have a solid 30% debt to income ratio, probably better off conventional. It's not so straightforward, but I can make the math out.
Yeah, and here's what you get, guys. Here's your conventional, here's your FHA. Which one do you want? And then you pick what's best for you and your family. Literally, that easy. Yep. Andy the Goat, guess what he's predicting again?
What is he predicting again, Andy the Goat? Yep. I think he actually is predicting a crash. And some of the, like Jamie Dimon is predicting a crash. There's a bunch of people that are predicting a gigantic crash.
Who is that?
They've been predicting it for about 10 years.
But, so those of you in here, someone in here probably thinks there's a crash.
Yeah.
I want you to tell me why. What's the reason why?
I can make my argument for a crash. I can make it. I can also make an argument why it's not going to crash. The argument for a crash is real easy. We're way overextended on debt. Like way overextended. The federal government's $31 trillion in debt, I think, somewhere in that range. We're way overextended on debt. That's my argument for a crash.
How does that make us crash?
Because we got to pay the bill. Sooner or later, we got to pay the bill.
That's government intervention. So government intervention is going to cause the crash.
No. We got to pay the bills. Every day when we're in a deficit,
What
means the Army.
From what bank account?
The Federal Reserve.
They just print more.
That's my case for no crash.
This is the same thing.
Yeah, that's my case for no crash. Yeah, that's my case for no crash. My case for no crash is if we would have crashed, if it was going to operate off of that dynamic, it would have already happened. And because we're just like right now we're QT. QT is quantitative tightening, and we're bringing in up to $90 billion a month out of the system. Taking it out of the system. This is why unemployment is high. This is why the milk is high, eggs are high, gas is high. This is why everything's high, because we're QT right now. We're quantitative tightening right now. And the federal government's just paying, the FOMC is just playing this thing like a fiddle, man. They're like, hey, I'm going to bring more money in, I'll put more money out, and bring more money in, put more money out. And that happens. Now, as long as they're allowed to play it like a fiddle, it doesn't go off the rails, they can control this economy pretty darn well. Pretty darn well. Do I think it's good overall? No, absolutely not. But the United States has the best military in the entire world, and nobody will dare collect on the mafia. Nobody will dare collect. Hey, mafia, you owe me some money. Yeah, come and take it, guys. Let's see what happens. That's what's really happening.
Austin Porter was the best time to call you guys, so you heard it here. You can call these numbers, but text us right now, and then we'll just call you when we're done. Or
Andy the Goat seems like an educated man. Bring it, man. Bring it. I love these arguments, man.
So as long as we're not on the live, don't text us.
Yeah.
Outside of the live, text us.
Yep.
My issue is I don't qualify for a personal property.
I don't qualify for a personal property. I don't know what that means.
I think they said I don't qualify for a home loan, so I can't buy a house. I think that's what that means.
Well, if you don't qualify, then we have to figure out what a loan. Oh, a loan. Okay. So get a non-occupant co-borrower, or get your income up, or file your taxes in a way that will let you to qualify. There's a lot of things that we can do, but we have to diagnose the problem first and solve the problem.
Is it the same process if you want to get a house built? Ask
No.
Jose.
No. Jose, don't even think that. Not even for 1 second. Don't even think that. Look at that. That's not good. So don't even think that. It says only 1 minute, and it gets stuck. So 19. Okay. So Jose. If you're trying to build a house, that's a profession. It's a profession. It is there's guys who make a living doing this. They're contractors, general contractors. Why? Because before you lay the concrete, you have to check the soil to make sure the soil can actually sustain the weight of the house, or else it'll tilt and you'll break the foundation. How do you know that? It's a profession. Then you have to have the right amount of thickness of concrete and the right type of strength of concrete. It's a profession. Then you have to lay the pipes right and the electricity right and all that. So is it the same? No, because you're building a house and there's a lot of risk. A lot of things can go wrong when you're building a house. Now, that being said, there are extra programs. There's the FHA one-off, the VA one-off, and I even think there's a version in the USDA. Read a guideline yesterday where there's a kind of a one-off on a USDA. However, is it the same process? Oh, no. It's much more difficult. Much more difficult.
KQ5, what's the best way to buy my family member's house with FHA and she has a reverse mortgage?
That's real easy, super easy. Call us. That's it. We do the rest.
House is worth $520. I would be buying it at $450. I make about $100K a year.
Yeah, pretty simple. Call us. We'll do the rest. And the truth of it is probably going to be. Oh, wait a minute. There's some things that I gotta. You still have to call us, and we'll still do the math. But reverse mortgages are notorious for really big fees, like really big fees. Like if you borrowed $300,000 5 years ago, and you think you still owe $300,000, you probably don't. You probably owe $400,000 or $500,000. They're like notorious for big fees. They actually got slapped on the hand because they were charging too many fees, and the federal government stepped in and said, y'all are taking advantage of these people. You have to stop.
Yeah, that sucks. Hello, what's the program in Minnesota called? The one that forgets $35,000 if you live there for a long time.
I don't know off the top of my head. I did a video on it not that long ago, but call me and I'll get it to you.
When was the last property you sold with a person that had a 580 credit score in California?
When was the last property you sold?
I don't sell properties.
I don't sell property either. I don't deal in properties, man. But I see you're doing all caps. So you mad. You big mad. You big mad. So 580 FICO score, 580 FICO. When's the last time you did a 580?
We have one in escrow right now.
Do we?
Yes.
No kidding.
We always do.
Yeah. A lot of people with low FICOs, they come to us, man. They come to us. We do it.
So when was the last time? Currently, we have one in escrow that we're working that's going to close, I think, in a week.
Mm-hmm. So what do you think about the Teacher Next Door program? It's a program. It's a program. A lot of these programs are marketing. They don't really have a lot of real teeth, but they can say, hey, we'll give you an extra this if you go with us. And it's something. It's extra. It's good. Just make sure you're not paying for it in the rate, because that's usually where you pay for it, is the rate. And just make sure it's good.
So let me share this with you. Mm-hmm. So these specialty programs, okay? This is a specialty program that piggybacks on your FHA or your conventional or your VA, whatever it may be, okay? These programs come with fees. So in order to use them, the bank is going to charge you to do this program. Maybe 1 point, maybe 2 points. Now, when you get these fees, you got to pay for them through closing costs. Mm-hmm. And the Teacher Next Door program, like he said, is marketing. So they market the same program to cops, the same program to teachers, the same program to first responders, the same program to Costco workers, whatever it may be. But the truth is, we have an in-house program right here that will give you a grant, if you want a grant, that will let you borrow the down payment if you want a down payment assistance program, and you don't have that extra fee. So factor that in with your things. Give us a call if you need us.
So SM something, what's the average APR right now? Well, I got news for you. APRs don't average. The reason they don't average is because the APR takes into account your down payment, your closing costs, the cost to buy the rate. So for everybody, it's going to be different. So what we look at is the rate. And we look at the rate and we say, hey, listen, right now New American Funding is saying 5.625. Now, 5.625 sounds amazing. It really does. It really does. But anybody who understands finance, the next question is going to be, what's the APR? Ah, good question. Thank glad you asked that. And the APR of 5.625 is 6.135. Now, if you understand finance, you're like, okay, why is there such a difference between 5.625 and 6.135? If you're in the lending business, you know you probably paid a few points in order to get that 5.625. So there is no average APR. That's why people talk interest rates. And the reason that the government said it, put it out there, it got some hearts in there. Someone's like, hey, this guy knows what he's talking about.
Thank you for the hearts, guys.
Appreciate the hearts. Yeah, somebody in the government said, yeah, but we do need to let people know if they're getting screwed somehow. So the way you find out is you take your interest rate and you take your APR. And they should be somewhat close, not ridiculous. If you'll see the difference between 5.625 and 6.135, if you told me that, I would go, okay, I have to see what's causing that APR to go up that much. And when you dig into the actual quote, you'll see that there's a point or two buy down, and that's what caused the rate to go up. So there is no average APR. There's a interest rate, and then there's your APR.
Yeah. Jose Gallegos, as far as getting the loan, what is the process? Okay, so I'll give you what you need, and I'll give you our process. Okay, so here's the first thing. You need 2-year work history. You need a 580 or better credit score if you want to get in with minimum down payment, and you need some assets, okay, or 2-year work history. Mm-hmm. So once you have all that, all you have to do is call us or text us, and then we'll have a brief conversation, and then we'll text or email you the application. And then once you're done with the application, it's all on us. And there's a lot of stuff on our side, but our results are either you're qualified or you're not. And if you're qualified, you go shopping. And if you're not, we'll teach you what the problem is, and then you'll solve it.
Thank you for all the hearts. We appreciate you. You let the algorithm know that we're trying to help you get a house in 2024.
Yes. And those of you that are on the social media right now, please give us some more hearts, some more likes, and share. Because the more that we get out there, the more questions we get, the more we can help everyone. Okay? Nana's back in the house. How you doing?
What's up, Nana?
How was the interest rates paid during down payment or included in the loan? How was the interest rates paid?
The interest rate is the cost for the borrowing of the money. So if you borrowed $300,000 right now under New American's perfect financing terms, it would cost you 5.625% a year to do that. Now, it does get a little wonky because they have an amortization table and they get to choose where that payment goes, and banks choose that most of it goes to interest for the first 15 years. It's kind of a little bit of a scam. I wish it was different. It's not. It's not simple interest. It's not straight interest. It's called compound interest, and the interest rate is the cost for the borrowing of the money.
Yeah. User 5161. Can I buy a house? My credit score is 541.
Only if you got a lot of money and a lot of income.
What's a lot of money?
A lot of money is going to be more than 10% because your 541 is going to hurt you. And a lot of income means your debt to income has to be very low. And if you've got a lot of money and a lot of income, yeah, let's do it.
All right, user 5161. Luna and Bagheera. Ooh, Bagheera, like the lion on that show. I put in an offer for a condo for $585 with $75,000 down conventional loan. Payment is so high. Yeah, it's going to be. Do you qualify, though?
Yeah.
Because if you qualify, I would do it, and I would refinance in about a year, and you'll be in a great spot.
Cool.
You're welcome, whoever user 87 to 82 is, and
where you guys located? Here we go.
Where are you, man?
He's right there.
I'm right here.
I'm right here.
He's right there.
And we're in Riverside, California, but we do business in all 50 states. How many? 50. How many of them? All of them. All 50? All 50. Yes. Even New York.
What about Florida?
Florida? Yes, Florida.
Okay, you
all 50. All 50, man.
Juan in the house. Do you recommend to permanently buy down the rate or 2-1 buy down?
Juan. Neither one. I know that's going to sound so strange, but I'm going to justify real quick for you. Juan, at today's interest rates, let's just say that you're an average guy and you get a quote at 6.5 at par. 6.5 at par, which means your FICO's not great, but it's not bad. 6.5 at par. And let's say you did a 2-1 buy down. All right, sounds amazing today. Sounds amazing, 6.5. Why? Because rates are 6.5. And Juan, today when you close that loan, you're going 2 points down. So you're at 4.5. Sounds amazing. Ah, it's great. Amazing. And the next year, you're going to go up to 5.5. And then the third year, you're going to go back to 6.5. Sounds great today. Sounds amazing. So you're at 6.5. And you paid $10,000 for it. Okay. 6.5. You're now paying 4.5 today. Sounds amazing. Sounds amazing. Cool. And you paid $10,000 for it. Now we roll forward 6 months, and the Federal Reserve does what they said they're going to do, and interest rates go from 6.5 down to 5.5. That's only 6 months from now. That's not very long from now. But 6 months from now, we're down a full 100 basis points. Holy smokes, what does that mean? Okay, all right, what does that mean? Well, Juan, you're at 4.5, but by your contract, you're going up to 5.5 next year, and it costs you $10,000. And then it continues to go down like the Federal Reserve believes it's doing and putting out on their website. They're actually going to cut rates all the way up until 26, what they're putting out on their website. So now the market is 4.5 and you're at 6.5 because you signed a contract and you paid $10,000 to get that privilege. And now you're pissed. Why are you pissed? Because the whole industry is at 4.5 and that stupid bank is making me pay 6.5. Can I finance out of it? Oh, you're going to finance out of it. And they're going to charge you for the refinance. And you already paid $10,000 for that privilege. And now you're going to pay between $3,000 and $5,000 for the privilege of getting the regular market price. What? That's a 2-1 buy down.
Yeah.
So you have to have an understanding of the mortgage business and the financial markets, what the Federal Reserve is forecasting, and what everybody else is forecasting in order to put this together. But if you just listen to a simple one-level thinker, I don't know, uncle, cousin, like, yeah, I get you a 2-1 buy down. That's a great idea. Yeah, it costs you 10 G's. Don't forget that.
There's a couple of no-brainers in there. So
yeah.
if you're going to move, don't do it. If you're going to get divorced, don't do it. If you're going to, you get what I'm saying?
If you're going to live more than 2 years, don't do it. Yeah, I mean that's kind of it. But the LOs, the loan officers who sell this to you, usually builders, by the way, So they're going to say, hey, we can beat everybody. Your payment's only going to be this. Oh yeah, it is going to go up next year and the next year, but it's only this right now. But you have to be able to see this far enough to go, hey, I don't know if that's such a good idea. Instead, Mr. Builder, why don't I take that 10 grand and do a principal reduction?
Ooh.
Why?
Like that.
Because I'm actually going to be refinancing in about a year. What? Yeah, I actually had one probably a month ago where the guy said, hey, what's my rate? And I said, that's 6.5. And he goes, okay, Lee, what would you recommend? And I said, if you want my recommendation, I'm going to say you take 7.825. 7.825. Whoa, Lee, why would you recommend 7.825? I said, because your 6.5 is going to cost you 10 grand. But instead of that, very expensive house in Austin, instead of paying 10 grand for your 6.5, I say we make the bank give you back 10 grand. So now you have the 10 grand that you saved and 10 grand more, but you're paying 7.825. Now you have $20,000. Yeah, Lee, but the payment's $300 more a month. It is, yeah, no doubt about it. No doubt about it. So you take that $20,000 and every month you eat away at $300 a pop until we refinance, because you are going to refinance. Whether you're at 6.5 or you're at 7.825, you're going to refinance. And how many months does 20 grand buy you at $300 a clip? And it was a long time. And he says, you know what, Lee? He was an engineer, very analytical. And he says, I agree with you. I'll take that higher rate. And I was like, wow, that's the easiest ever. Engineers, man. Engineers know their shit, man. They know that you put the numbers in front of them and they shoot at it from all different angles. They're like, yep, that's it.
That math is math.
And there's no emotion involved. But it worked, yeah.
Caesar in the house. I've done 2 DSCR loans last year. I have good credit in the 700s. I don't show income. Is there a low down payment loan? Good credit? I've only found 20% down.
Well, if you're doing another DSCR, they're all 20% down. If you're doing a DSCR, there's one that's 15% down, but it's very difficult. If you have low credit, forget it. You're not going to get 15%. But the DSCRs are 20. If you're looking for your primary residence where you live, FHA is 3.5%. And if you haven't owned a home, Fannie Mae, Freddie Mac, 3%. If you have owned a home, 5%. Pretty simple.
Nana coming with some good questions. Do you guys take your fees from the loan, or do I have to pay?
Very good question, Nana. Thank you very much for that. So, it depends on the type of loan officer you choose. Wait, what? Wait, what?
He
What do you
said
mean?
it.
What do you mean?
I heard it.
It depends on the type of loan officer you choose.
I heard it first.
What do you mean? What do you mean? Okay, cool. Here's what it means. There's two kind of verticals in the lending business. One of them is a direct lender. One of them is a broker. A broker is going to be paid a direct commission. Direct commissions have to be disclosed, and you pay for that. A direct lender is a W-2 employee. We're W-2 employees. Now, that's not to say we don't get paid a commission, because we do, but it's built into the loan because the direct lender is big enough to have direct lines. That's what direct lender means. Direct lines with FHA, Fannie Mae, Freddie Mac, VA, USDA, and a few others. But they are big enough to have a direct line. And when they hire us on, they say, hey, this is your commission, like it or not. A broker doesn't work like that. A broker can say, on this loan, I'm going to choose to make 300 basis points, 3% commission. On this loan, I'm going to choose to make 100 basis points, 1% commission. They get to choose depending on who they send their loan through. Oh, I'm going to piss some loan officers off by saying this. Oh, I'm going to piss some people off. They're going to be big mad. Yeah, but if you choose a broker, that is how a broker has to get that. They disclose it, by the way. When they send you your CD, they usually don't disclose it till the CD. But on the CD, the closing disclosure, they will tell you, this is how much I make. They have to. It's the law. And there's another piece in there. There's one more piece that they don't disclose. It's a little bit wonky. And this is a little scary. And it's only if you're in the loan business will you know this. Every company that's in the loan business has to choose their compensation every quarter. So the real intricacies are this loan company says, hey, listen, on ABC loan, I'm going to choose 100 basis points. So my interest rates from ABC loan are going to be better. On XYZ loan, I'm going to choose 300 basis points. So my interest rate is going to be higher. Somebody's hearting us up. We got LOs in the, we got LOs in the property here.
More hearts, please.
Yeah, more hearts. So if they choose XYZ, then you're going to get a higher interest rate. You don't even know it, because they get to choose who they send their loan, their brokering through. So if they choose ABC, they're giving you the best interest rate, but they're making the lowest commission. If they choose XYZ, they're getting a higher commission, but you're not getting a great interest rate. It's a very wonky part of the business, and unless you really understand it, it's a little dirty. It's a little dirty, but is one better than the other? Not necessarily. I mean, there's some times when I'll actually go, hey, I can't do this loan. I can't do this loan. So I have broker friends, and I'll call them up and I'll say, hey, listen, I really want this client to get this house. Just take good care of them and don't kill them on the commission. And they'll be like, Lee, if you're giving me a referral, I'm going to give them the best. I'm like, hey, I'm not saying don't make money. I'm saying don't kill him on the commission. Give him a good rate. I really like this guy. And I'll send it to a broker. That happens. Occasionally we can't do a loan for whatever reason, but it happens. And the same thing happens with us. A broker goes, hey, listen, we can't do this because of blah. Or like our proprietary product. We got this client who wants to buy zero down, and a broker can't do a 600 FICO, right? 600 FICO? Right. A broker can't do a 600 FICO zero down. So they'll call me up and they'll go, hey, Lee, remember a while back you sent me a client that needed a little help? I got a client that's ready to go. They want to do zero down. They got a 600 FICO. I can't do that. You know it's a proprietary program for NAF. Can you take good care of them? Like, yeah. Sure, I'll take care of them. It really is that way in this business. It's not a bad thing. So how do we get paid? We get it. We are W-2 employees. We get paid by the bank. We do get a commission. But it's not near what we could get. I get brokers who are offering me 3 times my commission today. Today, I can make 3 times my commission just by changing where I point my car in the morning. But I don't do it. But you got to pay for it. Yeah. You got to pay for it. And I'm building a long-term business, which means I have to give you a competitive rate or you're never going to use me again. So that's what happens.
All right. Good question, Anna, and you're welcome. Caesar, can I get I already read that one.
Yep.
Christian Roberts. Just logged on. Do you gentlemen discuss ways to boost your credit scores reasonably fast?
You tell them.
Thank you in advance for sharing the knowledge towards home ownership. Okay, cool. Yes, we do. We have a little strategy that you could do. You need more available credit. Okay, so a credit card that has a $1,000 limit and a zero balance has $1,000 available credit. And the credit bureaus love this. To have available credit, it's going to really spike your credit scores. So you need more available credit. But how do you get it quick? Well, what you would do is you go to mom, dad, sister, cousin, whomever, make sure they have good credit, make sure they have a good established credit card, just one to start with, okay? And maybe it's a $20,000 limit with a couple $100 they owe, or maybe they never use it, they just keep it open for emergencies. If they add you to that credit line, you will get the history that they've built on that credit card. So if they've had the credit card for 10 years, you get 10 years of on-time payments and low balances. And you'll get that almost immediately. So I would say in a reasonable amount of time, one week or so, your score is going to go from wherever it's at to 20 to 60 points. Like that. Per card.
Fast.
So if you get added on one trade line, two trade line, three trade lines, the more the merrier. And that will really help you boost your credit really fast. Just know that if you guys get into a bad spot and they're not happy with you anymore and they remove you from the credit card, your scores will drop to where they were.
Fast.
Okay? So, that being said, if you have crap credit, I recommend Credit Repair. Go into the link in our bio and click on Fix My Credit and get yourself into credit repair and get it fixed if you know that it's challenged. Okay? So I hope that helped, guys.
Yep.
Stevia Lopez. Everyone listen to this guy purchase a home because that's the best investments you're going to make. Thank you, Stevia.
We hope so. Yeah, we hope so. We hope so.
Cool Your Brews. Can you explain a HELOC and or if it's better than refinancing?
Okay, so Cool Your Brews. It's a real simple math. Everything's math, by the way. None of this is, hey, it feels better to do this. It feels better. It just felt better to do a HELOC. It's always math. And if you have, like I'm working one right now at a HELOC, and she says, hey, Lee, you put me in a house about 6 years ago. I got a 2.8 interest rate. I need to get some cash out. I was thinking about doing a cash out refi. Now, as a lender, that's a lot of money for me in commission. But it's a horrible move for a human being. Why? Because she's got 2.8%. She's got 800 FICO, and she's got tons of equity. I said, hey, I'm going to give you some advice here. You're probably better off with the HELOC. The interest rate's going to be much higher, but you're not going to touch your 2.8% interest rate. I think that's a better move for you. And she goes, well, Lee, I only need $50,000. And I said, yeah, HELOC is probably way better. The interest rate's going to be horrible. It's going to be horrible. It's not. It's horrible. But the overall picture for you is way better. Now, what a lot of people don't know this, loan officers will know this. What I just did was I cut my income from $4,000 down to about $150 because it was the right thing to do for the client. And you know what? This client loves me. She sent me tons of referrals, and I'm building a long-term business, not trying to make money today. That's always the way we approach it. So HELOC is home equity line of credit. It's like a credit card, and it's done off of the equity inside of your house. A refinance is I'm taking the old loan and getting rid of it, and I'm refinancing at today's prevailing rates.
Yeah. User 82. I don't know if you're asking this question because you know the answer, but it's a really good question, and I'm going to read it. In LA County or IE, is it easier to qualify? Which one? You don't even know what you're asking.
Yeah.
But the answer is kind of. Give it to him, Lee.
I don't understand the question.
Loan limits. We're dealing with what they asked is basically San Bernardino County
versus
or LA County. Which one's easier?
So they're about the same. They're going to be the same to qualify, but finding the house is difficult. So let's say somebody came to me with a $140,000 income, and I say, hey, you're qualified for $650,000 house. What I just told them without them knowing is you can qualify all day long in the IE, but you ain't going to buy nothing in LA. Nothing in LA. Nothing. $650,000 house in LA, very, very rare. So the good news is that because the loan programs understand that it's very expensive in LA, they increase the loan limits. So if you came to me and you said, hey, Lee, I'd like to buy an $800,000 house, FHA, in San Bernardino or Los Angeles County, I would say you're not going to get away with a straight 3.5% down FHA. You're going to have to put a lot more down. Why? Because the loan limit is $766,000 and you're not going to get in there. But if you went to LA all day long, 3.5%. Why? Because they understand it's a different market.
Yeah.
Did I
so
answer
good
it?
question.
Did I do good?
82,
Yeah,
user 87. A cup of cheese.
Am I right on the 766? Okay, good.
No, 644.
644 is
Yeah.
a 644.
Yeah.
Okay, thanks.
Cup of cheese. Can I buy my parents' house and assume their mortgage?
Buying their house and assuming their mortgage are two different things. Assuming their mortgage is assuming their mortgage. Can you assume it? Maybe. The answer is maybe. It's going to depend on the investor and whether they'll allow it. You have to go through the servicer in order to even ask the question. Who's the servicer? That's the person that collects the payment every month. Who's the investor? The investor is the one that lent the money. And if the servicer allows you to ask the question of the investor and the investor says yes, then you have to go through underwriting and you would just assume their loan. Can it happen? Yes. Does it happen? Not as often as it should.
Yeah. Famous egg, 1970. Famous egg. I like that. Is it the right time to buy? I have about $30,000 in cash and about $450,000 in my 401k.
Famous egg. If you want a house and you think you should be owning a house, it's probably a good time. Yeah. If you're trying to time the market, probably not a good time ever. Why? Because you're going to say interest rates are too high. Yeah, and they are. But housing prices are lower because interest rates are high. Well, then there's the other camp that says, I'm going to wait till interest rates go down. And they will. And when they do, guess what happens to house prices? They go up. And then all of a sudden, it doesn't make sense because house prices are too expensive. So if you're just trying to time the market, here's a lesson that I learned in the stock market, okay? There's something called DCA, that's dollar cost averaging. And everybody, when they first start to invest, are like, hey, I'm going to try and buy at the low and I'm going to try and sell at the high. Everybody tries that. Nobody can, not even the best stock pickers in the world. But one thing that has been proven, if you DCA, if you just say, hey, I'm putting $100 a month into this every month, into the S&P 500 or the Dow or whatever you choose, the Russell or whatever, I put $100 a month in, I don't care what it is, I don't care what it is, I don't care what it is. That beats the stock pickers all day long. Why? Because you're doing it with a strategy that you're not trying to time the market. If you're trying to time the market like, hey, I'm trying to time it at the high and time, some people occasionally win. But most, like Vegas, most lose.
I lost.
Yeah.
I tried to time the buy down. I lost. I did.
Okay, cool. You did you?
True story, yeah.
Oh, yeah?
It
How
was
much?
like at 14 grand at the beginning, and I ended up buying in at like 22.
So you lost?
I lost like 8 grand.
You lost
Yeah,
8 grand.
for
I
sure.
remember this. I
Yeah.
remember you were mad too.
Daily I'm checking it.
I'm like, wait, I can't change it, dude. I can't.
I know.
It's the market. It's the
Yeah.
market, yeah.
Heck yeah. So user 8168, what happens if you have good credit and some money to put for a house, but you stopped working?
You're largely in a bad spot. Here's why. All loans are based off income. Now, if you have income and it's not coming from work, that's cool. Some people are trust fund babies and they're going to get trust funds for the next 50 years. Cool. You might have won the lottery and you get $5,000 a month. You might be retired and getting an income of $5,000 a month. You might be VA service connected disabled and getting $4,000 a month and Social Security of $4,000 a month for a total of $8,000 a month, which I can actually gross up. Then those are all doable, but you need income. If you do not have income, no good.
No good. Time for commercial.
If you need a badass loan, call a badass loan officer. You can reach your badass loan officer, Chris and Lee, at New American Funding by calling the number on your screen. Don't call right now because we're live. Call when we're done live.
How do I get a reverse mortgage? Ryan wants to know.
Ryan.
You're just the candidate, man.
Yeah.
You are the candidate.
$1 million to reverse mortgage. Good question. He's like, he sets it up for us, right? You
Yeah,
just
love
slam
it.
it. It's simple. You call us. Reverse mortgage means you don't make any mortgage payments. And then you live in the house. And then when you die,
Give it to
the
him
house
when
makes
it-
all the mortgage payments.
How old do
Yeah.
you have to be to get a reverse mortgage?
Dude, I just spaced it. 62.
That is correct.
Okay, good. I just freaked out.
Can
I was
you
like,
buy a house
I almost
with a
said
reverse mortgage?
59 and a half.
59 and a half.
That's different.
RMDs.
It is 62. RMDs, required minimum distributions, 59 and a half is where it starts. 70 and a half. 70 and a half? 70 and a half is
Something
where
like
it's
that.
mandatory, yeah.
Okay, user 23. A down payment assistance means I get a house for $0 down.
Sometimes.
Sometimes.
Yeah.
Nana, you appreciate it. You're welcome. It's
We're
our
here for you,
pleasure.
Nana.
Sharp Crease. What rate can I negotiate over 50% down with a 700 plus FICO?
You're not really negotiating sharp. I hate to say this, but when you walk into the market doesn't give a shit if you're putting 50% down because it's a big market. They don't care. We price in your rate. We'll do the buy downs we best we can. And then that's what it is. And then you're probably going to get the same thing, close to the same thing from every lender out there because it's a market.
And you'll probably get close to what we're putting up online. Because
Yeah.
I think we're putting 6.25 right now. So
Yeah.
you'll probably get close to that.
Yep.
Juan is back. Do all loan officers offer different rates at par?
Yes. In fact, it depends on the time of day.
Yep.
Like he could price one before we came in and he'll give you this at par. And let's just say it costs you $200. And then after the live, I'll go price it. I'm his competitor, even though we're partners, I'm his competitor. I'll price the exact same loan because we run off the same Encompass system. And what he was going to give you for $200, I give you for $300. But then when he reprices again, it's going to be $300. It changes all day. Like it does this all day, all day.
George, is it worth it to buy points on my loan?
George, you probably knew you didn't see the first part of this, but probably in this interest rate environment, probably not. Probably not.
If you don't
You know
have
why?
to.
Yeah, if you don't have to. If you have to qualify, like I have somebody who's 58 back end ratio and they do not qualify unless they buy their rate down so they're at the 56. Yes, you have to. You have no choice. But if you're doing it as a business strategy, everybody's going to refinance. When the rates go down, everybody's going to refinance. Everybody. So it's math. We have to figure out how much you're going to pay to buy it down, and how much you're going to save, and how long till that break even. Because the Federal Reserve came out yesterday. Chairman of the Federal Reserve, Jerome Powell, that's not him. Jerome Powell came out and he said, hey, we're holding to our 3 interest rate reductions in year 2024, that is the determining factor of the direction of our economy. And that's what they're stating like out there. And that's why the market screamed yesterday. So is it better? Probably not. Most of the time, probably not until you get to the lows. And at that point, I tell you, spend every dime you got buying down that rate.
Heck yeah. Team Sanchez give you a chili, man.
Appreciate the chili, man.
Hector, realtors fighting for their life right now.
Yeah, but it's not gonna. It's taking water out of this side of the bucket, pouring it into the other side of the bucket. The bucket's still the same bucket.
I like buckets.
Yep.
Rudy Salcedo, do you have a program for first time for a fix and flip loan?
No, not really.
First time investor?
Yeah, first time. Yeah, yeah. The programs are designed for you to get a home, not build your real estate portfolio. Real estate portfolio guys usually have a lot of money, and they don't really go to lenders. I don't have anybody who's like, hey, I'm going to flip this thing, and can you lend me some money? No, because we work with primary residents. Flip guys usually do hard money, and hard money is way different than regular conventional conforming, Fannie Mae, Freddie Mac, USDA, FHA, that kind of stuff.
You ever broke a kneecap?
All right.
You know what I'm talking about?
Nope.
All right. All right. Thomas, getting a $500K loan.
I'm in Texas.
What
I want to
would
buy a
that
condo.
be?
Dude,
Locking
you
out a
missing
permanent.
it?
That's the same as Rudy.
Oh, what's
We
up,
just
Rudy?
talked to Rudy.
All right, what's up, Rudy?
Rudy, he's in Texas.
Yes, yeah.
Like Texas, Rudy. Thomas, getting a $500,000 loan. What would I be looking at in the payment for the interest and principal? He wants P&I, man.
P&I?
P&I.
P&I. I don't. Well, I don't know your FICO score. I mean, I can't even touch it without a FICO score, and I have to know what your true FICO score is, not what you guess your FICO score is. So it's really hard to quote that kind of stuff. And by the way, when lenders put it out, because in order to offer to lend, I have to pull your credit, calculate your income, do your assets, build your file, and then I can give you an offer to lend. That's why every loan officer's out there going, hey, this is not an offer to lend. This is just a scenario. And that's true because the CFPB will come after us if we give you like false hope or anything. That's why when I tell you the rates right now online are 5.625. Don't believe me? Go to the top. Go to all of our links. Go to Cool Stuff, Today's Rates. Because that's what New American Funding is putting out on the website. And you can see it. And in there, they put 5.625 with a 6.135 APR. And anybody in the lending business goes, well, why is that such a big spread? Because you're buying it down. You're putting some points into this in order to get that rate. So there's a lot of rules involved in doing this.
Is it worth refinancing now to pull money out for an addition? I have very low interest rate.
I would not. I would, unless you like really had to. This is a really bad time to refinance unless you need to, like somebody's knocking at your door and going to take your house. I would stay away from refinancing if you've got a good rate. If you have an 8% rate, it's a genius time to do it.
Daisy, what kind of score for HELOC? We already talked about this Daisy, 620 or better, but that's not going to be the only determining factor. It's based on a lot of things. How much is your house worth? How much do you owe? How do you maintain your credit? So it's a little bit different than getting a home loan. It's more like getting a credit card. So it's kind of hard to determine that. But if you have better than the 620 and enough equity, give it a shot.
User 95. Why don't lenders talk about recasting?
Because we're not nerds.
Yeah, and what do you mean by recasting? There's a few different ways to talk
Nerd.
recasting. Yeah, so here's why. If you talk to a lender recasting, you're talking about a 5-1 arm, 7-1 arm, 9-1 arm, and I see that you have 4 followers, and I see that you're probably baiting me, but I'm just going to answer the question anyway. So recasting is when you use like the LIBOR as the index, and you had a 5-1 arm, which means you got in today at 6.5%, and then 6 years from now, 5-1 means for 5 years, it's going to stay at that, and then every 1 year it's going to recast. So whatever the LIBOR is at, it either goes up or goes down. That's recasting. But if you only have 4 followers, you're just baiting me. 56 years old and 57 years old, can we get a mortgage? Yes. Yes, yes, yes. As a matter of fact, you're the largest buying demographic in 2024. Boomers are the largest buying demographic in 2024. And even if you were 99, it's illegal for us to age discriminate. We cannot age discriminate. Cannot.
You mean to tell me you're going to give a 99-year-old a 30-year fix?
Absolutely.
Nice.
All day, every day. All day, every day. It's illegal. It's illegal to age discriminate. It is. It's illegal to age discriminate. So, yes, you can. And I don't even know what. It's very fact that you have to ask that question means our society is a little bit broken, because you should never have to ask that question. It doesn't matter how old you are. If you can pay the mortgage back, you can pay the mortgage back. Yep. They can't discriminate against you. It's a law, and it's a big-time law. Nobody can discriminate against you.
Nana, emergency comes in life. When it's time to pay your mortgage and you can't pay that day, is it grace per?
Is there a grace period? Okay, so there's kind of 2 grace periods, Nana. 2 grace periods. I'm glad you brought this up, because your mortgages are technically due on the 1st. Okay, so what day do you have to pay? What day?
The 1st.
The 1st. Cool. So there's an internal late. An internal late is for all the banks. If you pay all the way up to the 14th, every bank that I've ever experienced will go, cool, no harm, no foul. If you pay on the 15th, they're going to say, hey, that got a little close there. We're not a little happy about that. And because of that, we're going to charge you a $40 fee. But the only one who's going to know about that $40 fee is you and me. Nobody's going to know about it. I'm not going to tell the credit reporting agencies. I'm not going to tell the world. You just pay me $40, kind of a grace period. We're good to go. Now, you go over 30 days, they tell the world. If you're 30 days late, you will get a 30-day on a mortgage, which is a very big deal. If you have a 30-day on a mortgage, it harms every loan you're doing. Why? Because everybody in the mortgage biz knows you get that first 14 days and they won't even charge you. Above 15, they got their own internal bank fee. Sometimes it's $40, sometimes it's $75, sometimes it's, ooh, that's ironic. Sometimes it's $75 or whatever. But if you get above 30 days, you get a 30-day late that goes out to the bureaus. And very hard to get it erased. Almost impossible.
All right, dude, you ready? We got to do some rapid fire.
No, we can't.
Rapid fire.
Are we a rapid fire? Okay, cool.
3, 2, 1.
Rapid fire.
Tatum Decker, 3% debt to income ratio, 80K salary, 80K down payment, good credit. Could we qualify for a $500,000 loan?
80K.
I say.
How much down?
80 G's.
80 G's down, $500,000. $500 loan? 500K purchase price? Maybe. 500K loan? Maybe not.
Yeah.
So you're close.
G is their proper disclosure that when the note is reassigned, it will reflect as a deposit for the bank.
You take that.
I don't know the answer.
I don't know. I don't even know what he's talking
Out of my
about.
scope.
Dude, yeah.
Haley Camacho, where are you located?
Right there. He's right there. I'm right here. Riverside, California. We do business in all 50 states. How many 50? How many? All of them.
T.916. That means something. Don't currently own a home, but how can you get a loan for a vacation house?
Good question. Just like you would get a loan for a second home. That's what it's actually going to call it, your second home. Because if you rent in California and you want to buy one in Hawaii, you could say, hey, listen, I want a vacation home in Hawaii. They'll be, okay, cool, that's your second home. So I have to calculate your rental payment every month, and then your second home payment, and you need 10% down. Second home.
Caleb Williams, is it a good time to buy for first-time home buyers?
If you really, really want to and you want to own a house, yeah, it's a really good time. It's probably the best time, even though interest rates are very high. The reason is because right now, because interest rates are high, housing prices are stable. They've gone up a little bit, but not very much. So they're pretty stable. As soon as rates go down, prices are going to go up.
Renting my current home as income towards a second possible mortgage. 740 FICO, 180K income, 20% DTI. Cool your brews. Looking to buy soon. What do you suggest?
Call us right away. Call us. Like, we're going to be gone here in about 4 minutes, and then call us and we'll help you.
Is it a good time to buy?
We did that,
Blanca, can you explain USDA 0% down?
Sure. The USDA is geographically driven, meaning the house has to qualify, the address. So you go to USDA.gov, you put in the address. If the house qualifies, then we qualify the buyer. That's different than FHA. If FHA, we qualify the buyer, and then we make sure the house qualifies. Different.
You're welcome, Nana. Creation clause. Yes. All right, we jumped on it.
What'd you do, man?
I don't know, but this guy said, quick update. I ended up buying a Corvette instead of a home. Congratulations.
All right, good for you, man.
Can I see it?
Yeah,
Dude,
can I
it's
see
time.
Send us a picture.
I'm
Hey,
Chris
you know what?
Leslie.
We've been Chris and Lee. We appreciate you. We're out.